Well, I think when we look at the overall market, that's a big factor. The fiscal policies that have been put in place have been very positive for the market, and the fiscal policy on trade is that as well. What makes the market nervous, of course, is it going to be done or isn't it going to be done, the headline news. So what we're seeing coming out of this is, of course, volatility. And markets are going up, markets are going down. So, but the fiscal policies have been very positive for the market and obviously for the economy.
John, clearly we had a very big pullback from sort of October to mid-December, late December, and we've recovered about half of that level. How are you thinking about overall market valuations at the moment, buyer or seller?
Yeah, when we look at it, the valuations are pretty fair in here. So it isn't like, it's trading at 30 times earnings or that. So I think the valuations are fair. And what we're looking at for 2019, I don't think a recession is imminent. I think growth is still there in the economy. The economic numbers seem to be doing well. So I think probably for the first 6 months, maybe a sideways market, but overall for 2019, I think we'll have an upturn on the equity market, maybe even close to double digits. So from that point of view, we're very positive.
Why is that? Is that just on the idea that you don't think we're going into recession?
Well, we don't think we're going into a recession, and the economic numbers are still very positive, and valuations are not extreme. It's going to be much more of a stock picker's market this coming year because of valuations in that. So from that point of view, I think we like the market. It's going to be tough in the sense of what happens with this volatility. I think people bail out, and then when do you get back in, this type of thing. That's the difficult part of it. So you need to think a bit longer term in here in that sense.
Does the volatility push you, therefore, towards more defensive assets?
Yeah, we favor more defensive equity strategies in this market. That's kind of what we've done for many, many years is have defensive equity strategies where we can cushion the downside. So obviously the convertible security strategies, the other alternative strategies had worked well in a volatile period like this. And I think that volatility is going to remain here in 2019.
John, you said that it should be a ripe time for stock picking. I've always thought of you as an active manager, stock picker. Wonder how, as we are all remembering Jack Bogle and his legacy, one of the fathers of passive investing in index funds, you think he made an impact on this market, and how big of a contribution did he make, and what was your relationship to him, if at all?
Well, obviously we're an active manager, so we think being active in this market is very positive going into it because the volatility is not going away. The volatility is still going to be there.
Do you have any memories of your peer, your colleague Jack Bogle, and do you think that the impact he made on the investing space was a welcome one, even though it was to sort of boost passive investment, which is not your area of strength?
Yeah, I started in the business in the 1970s as well as Jack Bogle did. Back in the 70s, he created the Vanguard Index Fund. And if I remember back then, a lot of small investors, it was very expensive to buy individual stocks. So what he did with his creation of the index fund, he helped small investors invest in the markets, and I think that was a very big positive. So he was truly an innovator for the financial industry and allowing investors to invest in the markets. I may not have agreed with him on active versus passive, but I valued and respected his contribution to investors and to the industry.